The Bank of Canada has reduced interest rates by 25 basis points, but there is a lot of question marks to why they have actually done this. Is it because there is something going on with the banks when it pertains to defaults? We know that defaults have been rising. We know that business insolvencies have been rising. We've been covering all those things on this channel. However, by the Bank of Canada's metrics alone, you would be asking the question, why? Why have they cut rates? And we're going to get into that. Even their rate announcement report, it actually would lead you to believe that they're holding rates, not cutting rates. So anyway, Bank of Canada reduced rates. This other paragraph that's here is basically about what's going on around the world. In Canada, economic growth resumed in the first quarter of 2024 after stalling in the second half of last year. At 1.7%, first quarter GDP growth was slower than forecast in the NPR. Weaker inventory investment dampened activity. Consumption growth was solid at about 3%, and business investment and housing activity also increased. So business investment and housing activity on the increase there. Okay, so let's see what else is going on. Labor market data show businesses continue to hire, although employment has been growing at a slower pace than the working age population. Wage pressures remain, but look to be moderating gradually. Overall, recent data suggests the economy is still operating in excess supply. So this is what the Bank of Canada is saying after they just came out and cut rates. So that does kind of lead to that question of why they are doing this. And we're going to get into what's happening with the Canadian dollar, what's happened with the inflation measures over the past couple of months. And again, it just leaves a huge question mark. I mean, it is kind of a shock, and it's definitely something that I'll hold my hands up and admit I got wrong and I did not think was going to happen. The only thing which made me question it yesterday was that the bond market had already fully priced in that they were cutting rates yesterday. So that was already a done deal. And usually the bond market moves in anticipation of what's going to happen. And 90% of the time, it's generally right. So it's very interesting that they came out with this rate cut. But when you go into the actual data, it makes less and less sense. So you've got to ask that question of why. Is it because there's something deteriorating when it comes to the banks? Because we know there's a lot of problems with the banks when it comes to defaults right now and insolvencies, and those are skyrocketing. And even though a lot of people are going to be like, oh yeah, the housing market is going to rip off this because people are going to be anticipating more rate cuts, that might be the case. I mean, things have barely changed. It's just 25 basis points, remember that. But the housing market is not based off fundamentals at all. It's in a bubble. It's in a bubble that has been deflating, but still, it's not based off any kind of fundamentals. It's just based off herd mentality. So you could definitely see housing market activity that picks up as a result of this. It's going to be very interesting to see how this actually plays out and whether there is actually something that comes out that's going on behind the scenes here. So CPI inflation eased further in April to 2.7%. We're going to get into that in a minute because, I mean, month over month, inflation has really been rising. And, you know, the Bank of Canada is not stupid. They may try and act stupid here, but they know this as well. So you have to read the tea leaves here and think, okay, you know, they're telling us all this BS, so there must be something going on behind the scenes. Obviously, if there's a problem in the banking system and there's a problem with the banks, the Bank of Canada is not going to come out and admit that straight away because they don't want to instill panic into the markets. So it's going to take a while. So anyway, let's see what they said. So it eased further in April to 2.7%. The bank's preferred measure of core inflation also slowed, and 3-month measures suggest continued downward momentum. Indicators of the breadth of price increases across components of the CPI have moved down further and are near their historical average. We'll get into that. However, shelter price inflation remains high, with continued evidence that underlying inflation is easing. Governing Council agreed that monetary policy no longer needs to be as restrictive and reduce the policy rate by 25 basis points. It wasn't even restrictive. If you really think about it, it was just normal when you look at a historic average, which we'll get into. So anyway, recent data has increased our confidence that inflation will continue to move towards 2% target. Nonetheless, risks to the inflation outlook remain. Governing Council is closely watching the evolution of core inflation and remains particularly focused on the balance between demand and supply in the economy, inflation expectations, wage growth, and corporate pricing behavior. The bank remains resolute in its commitment to restore restoring price stability for Canadians. Okay, all right. So let's get on to this right now. So month over month, this is what we've seen for inflation. You've had 0.6% print in March. In February, you had 0.3%, and you had 0.5% in April 2024. So you don't have to be a genius to work out. You're at 1.4% with just the past 3 months. So I don't know about you, but that looks like quite the acceleration. Whether this comes down after, be very interested to see what happens now. When you look at core inflation, it's actually a similar thing. You saw March had a print of 0.5%, then down in April to 0.2%, and this may continue down again. But still, if you're looking at what inflation is doing, it's far from normal when it comes to like printing 0.5%, which is 25% of the Bank of Canada's target in one single month. And then you look at rent inflation, you know, that is at the highest level going back to the 1980s. And again, I think they're just kind of pointing at things and saying, oh yeah, you know, this is why we're cutting rates. But when you really look at the data, it doesn't make any sense what they are saying. And that's what I'm trying to show you in this video, that actually there is something going on behind the scenes that they're not telling us here, in my opinion. If you look at what's happened with the Canadian dollar, initially it exploded higher. You can imagine the US dollar strengthened significantly against the Canadian dollar. It's starting to peel back right now. It's going to be interesting to see what happens with this, because obviously they've been anticipating rate cuts. Where it is right now, it's not actually at the lows. And I did say a couple of videos back, you know, people will be expecting that the Canadian dollar is just going to absolutely fall through the floor. And that might not actually be what happens. If there's too many people that are positioning themselves for that trade, I guarantee the opposite will happen. But I don't really follow as gospel what happens on the first day. So today doesn't really matter to me, but it'll be interesting to see what happens over the coming weeks. And obviously this puts a question mark. Are they going to cut rates in July? Which I would think the probability is pretty high if they've already cut rates, because they'll just take it down to that 4.5% and then probably just hold there, because that's where they held previously before they increased and did another 2 hikes to supposedly their restrictive state, which I think is laughable. So I think us on this channel, we know that something is going on behind the scenes here, and we'll continue to monitor that. I'm going to be back later with another live stream at 5:30 Eastern Daylight Time. Anyway, guys, if you've enjoyed this video, I'd highly recommend that you check out this video here. And if you're looking for a VPN, you know where to go. Go to expressvpn.com/marketmania. See you in the next one.